Hi everyone, good morning. So how you doing? We are very excited to be here along with you on this wonderful topic that we have chosen to discuss with you. And I have along with me my friend and a very knowledgeable and experienced person. And he has a long industry experience and he is a investor in financial areas. And we would like to share few of the information with you regarding what is the importance of financial awareness, why you should invest, what is investment, few basic points. And here along with me, Sanjeev Hazarika with me. I thank you, Sanjeev, for being with us.
Thank you, Deva, for inviting a very interesting topic to talk about an interesting topic.
Yeah.
So hopefully we'll try to give as much details as possible and make everybody aware of some very basic financial information.
So first of all, I would like Sanjeev to give little background about this idea. So why we are here, and Sanjeev has worked in multiple different industries, but mainly his core area was in semiconductor industry. He was working as a designer, and now he is doing consulting to the new upcoming generations. And we are very fortunate to have him here among us to give some of the basic knowledge about the financial planning. So I would like to hear from Sanjeev. So what makes you interested in sharing the information to our friends and public? Why the financial planning is important?
Okay, thank you, Deva. So I think I am at core. I'm an engineer. I'm still an engineer, and that's my primary occupation. Okay, so I was always interested in the financial aspects of different, financial aspects of life. So I think when you're young, right? So you used to hear about a lot of this investment instruments, but we're not clear about them. Especially, I think a lot of these things are not covered in our educational syllabus and things like that. So we are not aware of a lot of investment instruments. So I think starting from 2008 or 7, so I used to read regularly in Times of India. So there was a page dedicated to financial planning and discussions about financial instruments. So that's where I developed more interest, and I found that really it makes sense. So whatever you're trying to explain, it makes sense, and that is where I started to I started developing interest. And maybe for last 10, 15 years, I've just tried to follow some amount of discipline in terms of financial planning. And we're just going to share some of those insights, whatever have developed during this course of this time.
Sure.
So that's the goal of this discussion.
Thank you, Sanjeev. And let me tell our audience that the main purpose of this particular podcast is to align with our basically health, right? Healthy lifestyle. So, in order to achieve our healthy lifestyle, it is very important that we should be aware about our finances.
Yes.
And how we should plan so that that can support us to reach our health goals and support our family ourselves. So, Sanjeev, can you shed some light on our health insurance and importance of that?
Right. I think before we go for financial planning or any kind of investment, I think the first thing is we need to take care of ourselves and our families in immediate needs. So that's the most important thing, right? So a lot of times we tend to ignore some of the core, some of the important aspects of, especially for how to take care of health and how to take care of our life. I guess before we go for investment, that's the first area of interest. Right? So I think in today's age, it is absolutely must to have a health insurance plan, right? So which take care of any kind of health issues, like hospitalization issues, costs and expenses, right? So for you as well as for a family. So that is, I think, the number one priority, right? Mm-hmm. And I think during the time of COVID, we realized it much more when you realize that if you get hospitalized, right? So with the cost of hospitalization going tremendously high. So and it can really literally dig a hole on a pocket. So in case we're not prepared well.
Yes,
So
in fact, it will lead to a lot of debt.
Yeah,
You have
exactly.
to borrow money from different
Yeah,
people.
yeah, it is going to lead to a lot. I mean, a lot of families get into debt because they have not planned for this. I mean, imagine if simple heart procedures and all, right? So it can cost many lakhs onwards. So it's a big cost basically. So I think health insurance is it's like a no-brainer, right? So people have to go for a health insurance plan. So that's a number one priority. And nowadays, with so many companies are offering that options, right? So it's very easy to choose what you need based on your needs. Right? So one thing about health insurance plans, you should be aware that it comes in a lot of conditions. So, for example, if you take a policy now, I mean, you may be able to get all the benefits or of the policy maybe after a couple of years from now, right? So you should prepare prepare beforehand. So try to write a policy as much in advance. So that is what's the key.
Okay.
So you can never immediately avail all the policy benefits immediately after you buy it. So that's the key. There's always a waiting period.
Great.
So,
Thank you, Sanjit. And for the laymen like who are very new to investment and who are like uh, uh, living their life as usual, but they're not aware what is investment. Can you just tell a few points about how it is different from probably?
Yeah. Before that, I think I'll just cover one small point regarding the life insurance as well.
Sure.
So yeah, health insurance one part. The second part is people have some life cover, so that in case we are not there tomorrow, so there is no financial burden on the family, right? So that's a key point. So for that, people can either go for life insurance or nowadays the better products are term insurance. So where actually you can buy a much bigger coverage, life coverage. In terms in case the insured person dies or something, right? So at least the family is safe, right? So and you get it for a much lesser amount of money.
Can you quickly tell what is the benefit of these advantage and disadvantage of?
So in the term insurance, basically you are you pay. You can get a much bigger coverage, right? It's like death coverage for a much lesser amount of money. So your outflow is much less.
Okay.
Whereas if you go for traditional life insurance, you pay a lot of money. Only thing is there are advantages and disadvantages. For example, you may have a money back policy or things like that. But I mean, there are options that are available, so people can evaluate what really suits them. So that's the key. Right? So I mean, today's the thought process is the term insurance is better. So whatever money you have, you are left with, you can invest in a better option, so which gives you better return. So I think that's the thought process.
Right.
That's the thought process.
And it will give you a peace of mind also, right? Once you
Yes.
invest
Yeah.
certain amount, and you don't have to worry much about.
So once
uncertainty.
once your health is covered, once your life is covered, then you can go to the next step.
Next
right?
step,
So
yes.
that's how it is.
That's why we are here. That's why we are trying to bring this awareness.
Right.
So how critical it is, because in most of the villages or now
Second
even in
towns
cities also,
especially in the
people
second.
are not much aware about this, and they end up with a lot of issues.
Yeah. I mean, especially there are a lot of health issues.
Health issues.
People are going through. Especially I see in second tier and third tier towns. Right? So a lot of this awareness is not there. So how to take care.
And let me tell you, so see, as Sanjeev has mentioned, term insurance, it is really helpful for the people with lower income levels. And even if they face, God forbid it should not happen, any critical diseases in future. So people get devastated, like they get broken. So if we have this backup, then they can fight against those critical diseases for the family. Okay. So now, so can you, Sanjeev, bring some clarity on difference between investment and savings?
Correct. Yeah. So that's the most interesting part, right? So, So savings, I mean, let's go to a technical definition. So typically savings means, you have a fixed amount of returns that you get. So the return that you get from your investment is kind of a fixed amount. It's usually a fixed percentage, right? So if you invest if you keep your money in a bank, or if you keep your money in your, say, fixed deposits, right? So it earns you a fixed amount of return. So it is more of a saving instrument.
Right.
So when you talk about investment, it is like it can give you a different rates of returns. Typically, it's much higher than the saving instruments. It can go low also, so it can fluctuate. But typically, investments means you keep your money for a longer period, and then over a period of time, so you get a much better return compared to any saving instrument. Right? So that's.
Is there a risk involved in that?
Yeah. So basically, when you look at any investment instruments, so basically, for a short time, there is always a risk, right? So you should always have a long-term horizon, right? So you have to look at least 5 to 10 years, or even longer. So when it comes to investment, what people say is more than the rate of return what you're looking at, the period that you're invested is more crucial.
Okay.
So the longer the period, it just follows the rule
Risk
of
will be less.
risk will be less, and then it just follows the normal mathematical rule of compounding. Right? So the effect of compounding you will really see.
We studied in our school days, right?
Right. So here
Principle.
actually it is all mathematics.
Yeah.
Right?
Yes,
So I think it's all the rule of compounding.
Compound interest. Yeah. And what are different areas of doing a proper investment? What do you suggest to our
Right.
audience?
Right. So I think nowadays, it has just opened up to everyone. So nowadays, people can invest in multiple areas. We'll talk about the online whatever facilities that we have. So earlier we had access to very little information where we can invest, what we can do. So traditionally, if you see, India has been investing mainly on real estate and gold. That has been the most favorite area of investment for any for any Indian family, and it is continuing also. It's still there. So on top of it, people started to look at equities as an investment,
Right.
equities as stocks as an investment.
Right.
Maybe only recently, even 20 years back, I think there was not much of awareness. So maybe last 10 years and all, definitely it has picked up.
Right.
And now, there's a lot of interest in this area, right? And there are different reasons why there is interest. So we'll just talk about that. So typically, so gold and real estate. They are safer, it is assumed to be safer, and so far it has been safer in India. So we always see them, they grow with time. But there are also risks associated with. For example, managing a real estate is it's not everybody's not everybody can do it. So it's not everybody's cup of tea. So people can do it. It's not a bad option. Similarly, gold. So I think possessing physical gold is always risky. We'll be inviting the wrong elements, right? So definitely it is not a good option. Say for example, if you want to invest in gold, now there are better options where it's like sovereign gold bonds. So the government actually issues the gold bonds. So you don't have to possess the physical gold. So you just invest the money, and that money grows as per as per how gold is growing in the market, right? So it's a virtual thing. So it's a much better option, right? So than possessing a physical gold, for example. And you actually earn a better interest. So government actually gives additional 2.5% interest if you possess gold in that. So these two, and then now equities that is coming in picture. So coming to investment, the key thing is what experts say is it's always diversification. Right? So you should have your money really invested in multiple different instruments. Okay. So that if one instrument goes down, so there's others to support. Right? So that's the key thing. So there are two key things. One is the diversification, and the other thing is the period about which.
That is called investment horizon or something.
Yeah, so you should have an investment horizon is so you can define your own investment horizon, basically how long you want to remain invested.
Okay.
Right? So based on your working life. So it is you can always decide that, and it is always advisable that people start much early. So maybe as soon as people start their careers, start earning.
That is the crucial part. Actually. So
That's a
we would like to advise if people who might be watching this particular video,
Right.
if you are starting your career, then you should think of investing, right, and the right place at the right time. So one more thing, Sanjeev. So sorry, you want to say something?
No.
Yeah. So nowadays, see, it is a common problem for everybody. Like, so when you go to a say sabzi market or grocery shop, we can see after every month we can see a new price tag. So things are like is rocket, right? So the prices are going high like anything. So it is like an influence of our inflation, basically, right? So what do you say? Like how this inflation and savings go hand in hand?
Exactly. I think very good question. So, so inflation is basically your price of goods are increasing, every year, every month, or every quarter, right? And inflation is measured typically it's measured, government actually publishes the inflation rate, and they also publish the sector-wise inflation rate. For example, food, right? So, food industry, for example, was inflation in the so they publish the inflation in different interest sectors. So typically in India it has been about varies between 5 to 6 to 7% roughly. So it's really crossed 8%, but somewhere around that, right? So what it means is if you have 100 rupees today, right? So if you put your money in a saving instrument, so you will get say 108 rupees at the end of the year.
Right.
But the price of goods also have increased by the same amount, right? So your purchasing power has not increased.
Okay.
Actually, right? So that is what is. So inflation is basically eating up.
Basically, if the price increased by 10 rupees, that means you're losing 2 rupees.
Exactly. So if the inflation is higher than what you have, what you're earning from your savings, and what typically happens in a saving instrument, you will actually end up, losing some amount of money, right?
Right.
So that's the risk with any saving instrument. And if you take even the best, fixed deposit or something, right? So you actually end up paying tax,
Right.
So which you don't realize. So even if I'm earning say 8%, my effective earning may be about say 6% because if I'm in a 30% tax bracket, right? So I may actually be my effective earning will be much lesser than what is what's the interest rate that the bank offers, right? Because of tax, and on top of it there's inflation. So our purchasing power is not increasing, right? So if we keep our money in a saving instrument, so that's it. And that is why we need to explore this other options.
Yeah. So we will come to that. So basically, as you mentioned, so it is it is very crucial that we should be aware about investment and we should do investment. And considering the fact that there is inflation also, so we have to maintain some balance. Now, point is like, uh, as you said, we should invest in equities, right? So some people might be preferring to invest in stock market, right? So how do you relate this?
Okay, so first let us
What is
understand.
stock market basically?
Yeah,
How
so
this works?
first let us understand
What
how
does it
this whole equities are working. I think nowadays, of course, a lot of information is available, so people are awareness is there.
Right.
That's a good thing. So, I mean, overall, the stock market is growing, and it is actually linked to how our economy is growing. Right. So, as the companies do better, they earn they earn better profits. Right. So they earn more money. Right. So overall, the economy of the country also goes up. Our GDP goes up. Right. So the economy of the country also goes up. So the stock market typically tracks how the economy of the country is growing. And for last about 30 to 40 years, Indian economy is on a growing track.
Okay.
And we are hoping that next at least 20 to 30 years we have good prospects, provided whatever things are put in place, whatever plans have been put in place, if it falls in places, right? So definitely India has a very good prospects in the next 20 to 30 years. Right? So that is the key thing, right? So can we take as an individual, can we take advantage of that and help our we will be in a better shape definitely rather than putting all our money in a saving instrument. Right? So if you see, so typically what you see is I mean, the Indian stock market has been giving about, on an average, so it is about 30 to 40% return on an average growth, right?
Okay.
So, and typically, even though there is no direct link, so what the experts say is whatever the GDP growth. So if the GDP growth is about 7 to 8%, so typically the market gives about twice of it, roughly. There is no mathematical relationship or something like that. This is just what people observe. So which means that you can actually earn about 15% on average, right? So if you remain invested in the equities for a long time, right? So and then you can apply the formula of compounding here. So that's where mathematics comes in the picture. For example, if you're earning 8% interest, right? So you keep your money. So it takes about 8.5 to 9 years, let's say, to double your money, right? And then of course there's a taxation on top of that, which we're not covered, which are kind of ignored for now. Whereas if you're earning about say 13, 14, 15%, so it will take about half the time, right, to double the money. And on top of it, you also have a taxation benefit, right? So on equities, so that's a huge advantage for individual investor. Right? So I think the key thing is you are taking advantage of a growing economy, right? And then basically somebody is really working hard. So there's a famous quote. It says, if you want to grow, see your wealth grow, so either we can work hard, or we can give part of the money to someone who is working hard.
Okay. Okay.
So
Well said.
it's a win-win for everyone. So you are giving part of your money to someone who is working hard, right, on the companies, and they are also helping you to grow your wealth. So that's the key thing about investment in the equities.
Okay.
So we'll talk about the risk and other things. So,
Right. And so now some people have that skeptical mind, like say, so the stocks if they invest, right? What will happen to their stocks, or even in equity also? They think stock market and mutual fund both are similar kind of. So can you like tell people so that they will be aware and they more inclined towards investing in mutual fund?
Right. So I think that's the key point here. So the first thing about investment is, right, so we need to understand the investment instrument. People say that unless you understand how it is working, it's better not to invest. You should have very good clarity about how it works. Then you will be convinced that yes, it makes sense, right? And then when it makes sense, you will be able to take an informed judgment, right? So that's very key thing about investment. Now, if you look at say when it comes to individual stocks, right? So it can go up and down, and then it can give a lot of headaches to people, right? So we're investing. So definitely, mutual fund is one of the safest bet. So where your risk is divided across hundreds of different stocks, depending on how big is the mutual fund portfolio is, right? So you basically average out the risk, right? So that so usually what happens is when some companies are doing good, others may be doing bad.
Right.
So you kind of average it out, and over a period of time, your money grows as per how the overall the market is growing.
Okay.
So for example, and it's very easy to see that. So I think people who are interested, I'm sure a lot of people already know it. So for example, for every index, for every stock market, so you have an index, right? So for example, BSC or NSC, Bombay Stock Exchange or National Stock Exchange. So you find an index, right? So index basically tells you. So basically what they do is they take the average stock of about say 30 companies. It takes a BSC 30 index, right? So and how their stock values are growing. So if you just look at the index, you have an idea of how it is growing, right? And that's an averaged value of say it's an average of 30 companies. So the stock average of about 30 companies. Right? So that tells you that, and if you see the index, so the index has been growing continuously for the last 24 years.
Okay.
So definitely, if you so here again the question of diversification is coming. Right? So the point of diversification is coming. So if you remain diversified with multiple companies,
the risk will be minimized.
The risk will be minimized. So most of the companies will be doing good. Some of them may not be doing good, but overall, definitely you have positive impact.
To summarize, what Sanjeev is saying is like what I understood is like, correct me if I'm wrong. So suppose I'm a newcomer to stock market. So I have done skeptical notion that what will happen to my hard-earned money.
Correct.
So if I invest in say specific industries, then there could be a huge risk of investing that money. But if I invest to some place where this money will be diversified in, so that my risk will be minimized.
Minimized, exactly.
So it is better to invest in those what you call instruments like probably
where you can reduce
mutual
your
funds.
risk, right? So where you can always reduce. I think for an average person, you may not want to take a risk with in the beginning. So once you become expert, so people have very good exposure about how the things work. So I think people can always take risk.
So eventually you are investing in stock market in a different
way.
Right?
So where you are reducing risk.
Yes.
And what people have seen is again this is based on historical data. So if you remain invested about 4 years, right, in mutual fund, so nobody has lost money as such. So
that is a record.
even though there are up and downs, right? So if you remain invested for at least 4 years, so that up and down cycles are kind of covered, and then you start to see positive returns after that. So that's based on historical data. So that gives you the confidence that it's a even though there are risks. Okay, so there's nothing like a zero risk investment,
Right.
but it can be minimized, and then we can look at it as a good instrument for investment.
And thank you, Sanjeev, for bringing this clarity to our audience, and thank you for people who are joining live. And so there are two things we are talking basically. Like, one is like investing and getting return out of that. Another is how we can secure life, how we can do live a prosperous life, healthy life by securing our money, right? So this is one part that is bringing a lot of clarity to investing in diversified funds areas. Another is we have been talking from the beginning is encouraging people to buy health insurance, right? So now that clicked information. So there is something called optimism bias. So optimism bias is something there is kind of a thought process in our human mind. There is a tendency that people will think that my neighbor will have some critical disease, I am safe. There is no history of diabetic or cancer in my family, so I am safe. So that kind of perception that most of the people, 90% of the people keep in their mind, so they hardly care about investing in real life. So this optimism bias is very crucial that we should identify and take proper precaution. It is like jumping from a cliff without a parachute. So would would anybody like to die like that? So thinking that you have something, some fly will grow, feather will grow. So this is very important. So now coming back to the investment part. So Sanjeev, can you just tell our audience, like, see, in what I experience is I met people, they hardly the people care about investing in health insurance. So can you tell people that is there any ways that when they invest in health insurance, they can get some benefits like tax benefits or returns or anything like that?
Yes. I think especially both for health insurance as well as life insurance, whatever money you invest, you can actually get a tax benefit. So entire money can be deducted from your taxable income. So that's a plus one, both for health as well as for your life insurance, right? So whatever money you invest, so you can actually get a tax exempt. So that is and that's why the government is going to encourage people to go for more for it. And it's an absolute necessity for everyone. So we get a tax.
I think we have covered pretty much.
So we talk about how much you need to invest.
Yeah, that is one important point actually. So, probably can you please tell our friends, like, see, people have different income level, right? And they might be thinking how much they should invest to fulfill their dreams.
Right.
and support their health.
Yeah,
So what do you suggest?
I think investment is it's a very very personalized thing. Right? So just like our diet and lifestyle is, right? So everybody has to decide how much money you can risk, right? So how much money you want to keep it safe in a safe instrument. So it should be always distributed, right? So you should never go for only for stock market or only for one type of instrument. So we have talked about the diversification before. So some part of the money definitely should always be in a safe instrument like say FDs or savings account, which takes care of your immediate needs.
Right.
So because the moment you go for investment, you should not be touching that money for the next 4 to 5 years minimum, and then 10 to 15 years in a longer term, right? So you should not be. You can of course withdraw, do a partial withdrawal, right? But you should never take it out completely, right? Till your goal is reached. Okay. So every person needs to define what is the safe margin, what you want to keep it safe for your immediate requirement, and how much can you risk, right? That's a very crucial point. And there's no formula for it. So every person needs to see what is his comfort level. So the good part is nowadays you can go for investment. I mean, even on a mutual fund or a stock market, right? Even with as low as 500 rupees. So it's very easy to do, right? So so it's like you decide, and every person can decide how much he can, how much money he can put it for investment for long term goal. So that's it.
Even on that same context, as you said, so that's why government is encouraging people with a lot of advertisements saying mutual fund sahi hai, kind of thing, right? Media and all.
Right. So that people can also take benefit of a growing economy. So we are just taking the benefit of the growing economy. So it is as simple as that. And we are taking the advantage of compounding formula. So in fact, it is very easy for everyone to find out. Let's say you have a financial target, right? You want to by after so much of years, so you want to earn this much of money. You can just put your numbers in a formula on a calculator. It's not available, right? And then you can decide, okay, per month how much money you should keep. So if your money grows at that much percentage, right? So what will be the end goal? Right? So after 10 years or 15 years, what is the target that you're getting? So you can set your target and then you can work backwards.
It's kind of reverse engineering.
So and all these calculators, I mean, there's a simple compounding calculator. So everything. So these things are making very easy. And the other thing that is making life very easy is the online process.
Okay.
Right?
Yeah.
So earlier a lot of paperwork were there.
Everybody has mobile phone and computer in the hand, right?
Everybody has mobile phone, computers, and then plus the entire process of investment has become it has gone online, right? So that is making it very easy. So nowadays we have so many apps and companies who are offering this online.
And that is also free. You don't have to pay.
Actually, it is free for all the individual investors. Actually, it is free. And so we have this Eating Money or Grow or Zerodha, right? So they are enabling the investors to come to all that you need is a mobile phone, right? You need an online bank account, Aadhaar card and PAN card. So that's all you need. And there's no physical process of verification. So everything is online. So it makes it. It has basically democratized the whole process of investment. So anybody can do it with just a mobile phone. So that has made life very easy.
So now we have come to at this point that now we have a lot of clarity between savings and investment. So instead of keeping your money in some account and keeping idle for a longer time, if you keep certain chunk of that money, as Sanjit mentioned, think about the end result, what you anticipate after 5 years or 2 years. Then keep that money in a mutual fund or very good instrument, and so that you can see your money grow and at the same time secure your life for your children, yourself, and family.
So there is one more. There's no formula for investment. Right? So I'm saying that it's a very personalized thing. So what a lot of experts say there's a 100 minus number of years formula.
Okay.
So it is like if I am 50 years today, right? So typically, I can take a risk with about 50% of money, and 50% of my money should be in a safe instrument.
Oh.
Right? So this is not a mathematical formula. It's just some kind of guideline. So the younger you are, so that the thought process is the younger you are, the more risk you can take, right? Because you have a long life ahead of you. Let's say you are in the 30s or 20s, so definitely you can take more risks with your money because you have a long life ahead to build and grow. So as we grow older, so more money should be in a safer instrument and lesser percentage should be in a more risky instrument.
Oh, that is a very.
I mean, these are all guidelines, right? So
Guidelines.
because everybody can, so it's like 100 minus number of years. So
It is not something that one person has invented this particular
Yeah.
formula. It is like by looking at a trend.
just a bit. So everyone can decide. And with people's disposable incomes are increasing now, right? So people are also exploring where you can put some money so that you can get a better return. So there are different options. And as you mentioned in the very beginning, right, always diversify. You should always have something in gold. If you can manage real estate well, it's a good option as well, right? So put something in, if possible, in a mutual fund. And if you are even more aggressive, you can go to stocks, right? So nothing is. So you need to, and every person needs to decide how much. What is his risk appetite? So based on his risk appetite, you can decide how much. So options are open. So that is what we want to highlight.
So thank you so much, Sanjeev. So all the information. So we have a couple of minutes left. So we will open discussions. So Q&A kind of.
Yeah.
So we have
So,
audience here.
Right.
Yeah.
So I think
You want to touch upon any specific things that.
right. So here we have not touched much details about what are different options, even a mutual fund. And I think so it's a very big topic. So we have not discussed many things about that. So the goal of discussion is to tell that there are options available, right? So once you have, once people want to explore, so there are a lot of options that.
Yes.
There are a lot of channels that are there, so people can go and explore to what the
Very
different ones. And we can also help in case somebody needs. So the goal of the discussion is to make people aware that there are instruments.
So it's a yeah. That's what we are trying to communicate through this medium. So now it's open for our Q&A or provide any inputs or any questions. Feel free to please put forward your questions or anything that we are open to discuss here. So you also can be part of this. So would anybody like to say something in this forum? I could see few people join about this topic.
If anybody has any question, you can also get in touch with us, and then we can also usually we can help answer questions.
Yeah. And we'll publish this. I think somebody's joined. Yes, please.
I had a question on, thanks for this session, it's very insightful. I had a question on derivative market. So these days youngsters are going into derivatives. So would you like to comment?
No, actually, I have no comments on the derivative market. So it is just an emerging thing, right? And there's a lot of speculation also happens there. And if you see the news, what you're saying is more people lose money in the derivative market than they make money, right? So that's the thing. So we don't want to go there. There are a lot of information that are coming up, right? But it is a very in a very nascent stage yet. The goal of this discussion is to make people aware that what are the instruments which are mostly safe for an average person. So I think derivative is still a bit risky. So we are not. Frankly speaking, I am not the right person to give a complete idea on the derivatives.
Yeah, so my understanding of the small investors like us, we should avoid derivatives.
Yes, true.
But I was surprised to know that recently in India, a lot of youngsters started going to derivatives. 29.9 or something, like more than 99% of the trading happens through derivatives in India these days. It's quite risky.
It's very risky. Yeah. And according to published data, more people lose money actually. I think if you see the newspaper reports, right? So I think more people
It
lost
is
money.
at least a low subject.
Yeah, So I think, and maybe the young people, what young age people are a bit adventurous. So and they are also going to speculation mode, right? But definitely, it's not a good thing for an average person, right? And that is what we're trying to achieve. And people want to take some risk. They want to earn some higher returns. People have some money at their disposal. So maybe that be a product, but definitely not for an average person.
This is a very good point that Santosh has brought it. Thank you, Santosh. So it's very important to know the do's and don'ts.
Correct,
right?
exactly. So
yeah.
the do's and don'ts are the most important, right? So, I mean, that's what I say. I think the key thing about investment is unless you understand how it works, right? That's what don't go for it. That's what people say. Right? So once you're clear, maybe you can go. For example, even crypto is very unclear, and there's no clear guidelines, so there is no rules and regulations. So people are just taking risk because they have money.
Cryptocurrency.
Yeah, maybe after some point of time things will become clear. There will be more regulations, right? So maybe that will be a good instrument at some point of time. But we don't have that clarity. So the key thing is unless you have clarity, that's why I'm saying don't go for it. So that's it.
Yeah, that's why we are not. I mean, talking much, or we are not recommending people to invest in cryptocurrency because, as Sandeep said, still way to go. Like I mean, long way to go to have more clarity on this.
So similar to derivatives.
As Santosh mentioned this.
Yeah, one thing earlier you said, as so there are two kinds of people putting money in the market. One is the trader, other is the investor, right? I think we should track more like an investor if we don't do it 24/7. And I've seen many examples as investors, small investors like us, if they pick the right stock, buy it and forget it. Okay, so and I think we should not go into time the market, when to buy it, when to sell it.
Exactly.
Just pick the right stock and forget it.
So you buy the right stocks, preferably at if it is a good time, it is even better. I mean, good time is when the market is little low. Buy the right stocks when the market is really low, hold it for a long time, right? So then you just forget about it. I mean, the key thing is if you go too much into the stock market, right? Our time and money, a lot of our time and money goes into that. We don't want to go there, right? So we also have other professions, other duties to take care. So I mean, that is maybe a task for all the day-to-day stockbrokers and other things. But as an average person, right? So as a salaried person with a personal job, I would like to put it somewhere where I keep my money. I know that it's going to grow, and then over a period of time. Right? So we are letting it work. I mean, that's the key.
We have often heard these stories of some of the fathers buying the stocks and putting it in the safe, right? And they have bought it 20 to 30 years back. So if we take this scenario of a small time period, we will see lots of ups and downs. When we zoom out, we will see the market always goes up.
Exactly.
Right?
Exactly.
And the market always goes up because of the inflation. Right? So to beat the inflation, I think it's what I understood till now in last 30, 40 years is we are not a trader. So as an investor, you have to pick the right stock.
Right.
It's good if you can buy it below bottom, right?
Yeah.
Time the market is not what we can't do. So pick the right stock, keep buying it, and try not to sell it.
Exactly.
Okay, and
Exactly.
forget it.
Exactly. In fact, that's what
And
people
after
say.
10 years, you can see the returns.
Exactly. I mean, that's what we have highlighted the point here. So when you invest more than what's happening, what's a possible return, so what's the number of years you're investing? So that's a very important thing. Right? So if it's a good stock, remain invested for a long time. I mean, there is nothing that can beat that. So that's always a winning. That's it.
Right.
Thank you.
Thank you, Santosh,
Thank you,
for the
Santosh.
valuable questions, and that will be much helpful for the listeners here and audiences. And at the end, Sanjeev, would you like to say something about some suggestions or some opinion or inputs, I'd say, to the new generations and the people watching this?
Right. I think the key thing about what we lost, our generation is we did not have the information, right? So when we started our career, we didn't have any information about this investment opportunity. Right? So even though there are a lot of advertisement things like that, but we never understood. For example, I remember when we used to go for movies, so there will be advertisements on mutual fund, right? So even the early 2000 or now late 1990s, but we never understood how it works. Right? But and we have started our career there, so if we had started investing there, so definitely we would have been in a much better shape today, right? So this is the opportunity for the next upcoming generation. So where they can start planning for the future, starting from as soon as they start their career. So this part was completely missing. Basically the whole Indian population is going from a savings mentality to the investment mentality now. So that's a transition that's happening, and that's a good thing. So, and that is what I think the young people
Should take advantage of it.
should take advantage of it, about how we create wealth. So finally, wealth creation is not that bad. So that wealth can always be used for better work. So young people should definitely plan their life and career. Life and wealth as soon as they start their life and career.
All right.
One thing useful for a future session is that if you could guide us right on picking the right stocks.
Right.
So how to take an example of your financial statement of a company, and then like
Correct. I think that's it.
like 5 years or so.
Right.
So pick one or two examples that has done very good in last 10 years.
Right.
And one or two financial statement, and what is the process of picking the right stock.
True.
Because we can't pick the right stock because one of my friends told that is the right stock. Right? I think we should do some basic research before picking the right stock.
Absolutely. So that is that's what even highlighted here. So when it comes to taking investment, never go with what others are doing. Right? So it should be based on your own research. Basically, you should be convinced that it makes sense. So that's a very important. Right? So never go with what others are doing and just follow it.
Because others, what do you call, aspirations and others' needs may not be same like you. Right?
Yeah, the analysis can be different, the interpretation can be different, right? So that's what I'm saying. The key thing is we should be convinced that it makes sense to us. Right? And as I was saying, I think
that we can plan.
maybe now with young people.
Let's so in future one of the session.
Yes.
I think double click on a couple of examples. How to go through a financial statement.
How to go to the financial statement. That's a good thing.
Use like a tool like ChatGPT to understand other aspect of because these days we have tools also, right? So how to understand and connect the top line, bottom line, and other aspects.
Yes.
Cash inflow and all.
Yeah, what's cash inflow, what's a P/E ratio, so all this different terminology, right? So people should be, just looking at a statement, people should be able to make out, okay, is it a good company, bad company, investment. So those financial judgments are very important. If people want to go for a stock or individual stocks, that's good. Thank you.
All right. Thank you so much, Sanjeev, for your time.
Thank you.
And
thanks everyone.
and spending with us and for helping people on meeting their financial goals and uplifting their lifestyle. Thank you so much.
Just to wrap it up, we are just trying to make people aware that there are options that are available, and then people can do their further research and then go forward. So thank you.
Thank you.
Thank you, everyone.